You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting, at least we think so, Options Insider Radio Network. We're coming at you once again from the Securities Traders Association 2018 Industry Conference, say that 5 times fast, where we are joined by a newcomer to the program and indeed to the network. He is Dave Weisberger, the CEO and co-founder over there at CoinRoutes. David, welcome back, or I should say welcome to the program.
Thank you.
And Dave, as we are wont to do with all of our first-timers here on the old network, why don't you go ahead and give us a little bit of an overview of your background and how you found your way to starting CoinRoutes.
Well, it's kind of a cool story. I started in this business a very long time ago. I hate to admit how long, but I built the first program trading system on Wall Street from inside technology at Morgan Stanley, and then did the same thing again in Japan for Morgan Stanley, and eventually found myself at Salomon Brothers starting their global program desk where I got involved in quantitative trading. So over the course of my career, I did things such as build impact cost models, one of the first ones for trading. I built one of their first centralized risk books. In fact, on the street, one for Salomon at the time. It became Citi later. Also built one of the first trading algorithms for volume weighted average price, which frankly is a terrible benchmark, but we'll get back to that later. And ended up running statistical arbitrage. Along the way, when I ran Stat Arb for Citigroup for about 5 years, along the way, I was an early advisor to a smart order routing company called Lava Trading, which was the very first smart order routing company that I know of, and achieved pretty significant market share. So smart order routing is something I understood, and then after Citi bought Lava, I ran it for a year. And after I left Citi, I went to a company called 2 Sigma, which is a quantitative hedge fund where I started their wholesale market maker and their broker-dealer. All along that entire journey, I've been enmeshed in the details of equity market structure, which is the topic that the STA is talking about. So when I come to this conference, it's essentially a room full of friends.
It's like old home week for you.
Exactly. So, if I sit down in any place, I sat down a few minutes ago to listen to Chris Concannon from the SIBO talk, and at least 10 of the people in my immediate vicinity were like, oh, hey, hi, hello, great seeing you, that type of thing. So I've been involved in what Rick Ketchum used to call market structure geekdom for a long time. But what happened was my son, who is now 25, who's been programming professionally, believe it or not, since he was 12. He had his first web hosting company at the age of 12. He came to me about 2 years ago with the idea that the cryptocurrency markets really needed structure. And his words were exchange mediation. Well, my market structure hat immediately took over, and I started looking at the markets, and I found that he was right. So we sat together and we designed a couple of unique things for this market. We designed a distributed cryptocurrency smart order router. We designed a consolidated filtered best bid and offer consolidated quote product, and filed for patents on both of them, and developed the product. So today, as we sit here with Ian, who is my co-founder and son, and we have built a product suite that incorporates consolidated routing, consolidated market data, the ability to look at market data in a third unique way, which is something we call real price. We'll talk about that later, which takes into account fees, because the market structure for crypto is quite different. We also have added algorithmic trading to our platform, and we are fully live with over 20 signed contracts, and we're in the process of building it up. So that's the journey. It was actually my son who got me into the business, and it was his idea.
The kids always drag us to the dark side, don't they? You don't hear many 25-years-olds talking about exchange mediation. So your son has interesting hobbies. I like that.
He certainly does.
And it's spawned into a business, so it's working out for them. Well, obviously you're here at the securities conference talking about what you're building here with CoinRoutes, and it's funny. I would say, even though we're at a securities event, 80 to 90% of the people who've sat in that chair with me so far have all brought up crypto. A lot of them on their own. I don't have to bring it up for them in some capacity. So it's top of mind for a lot of people in the space. So you're clearly in the right angle of the space these days. You mentioned a lot of interesting facets. Let's just get into them. I think the one maybe that might leap out to our audience the most, and because we hear this a lot from people, particularly this conference, who's focusing on the institutional audience, that crypto isn't quite there yet for the institutional user. You have custody issues, you have liquidity fragmentation, you have all these other issues. The execution speed is not quite there. So they're saying it's not quite there. It sounds like you're taking steps to get it there. Let's start with effectively an NBBO that you're creating for crypto. How do you go about that? And then also, how reliable is that NBBO if I want to come in and hit it for whatever 10 or 20 coins or whatever the case may be? Is that something, are all the venues you're connecting to? Can you route quickly and hit a bid, or is it kind of fleeting by the time you see it? How easy is it to actually transact on that NBBO?
Well, the short answer to the last question you asked, and I'm going to unpack that into a few places. The short answer to the last question is yes, it's extremely easy if you are a customer of ours. We can prove that that is the case. The reality is that crypto has a very different market structure than equities. So I'm going to answer your question on a consolidated best bid and offer, but before I do, I want to point out two very important differences in the market structure of crypto versus equities. And if you don't understand these, then you probably shouldn't be in the crypto business. Difference number one. The bid-offer spread is minute compared to the fees that exchanges charge. It is a massive difference. In equities, the bid-offer spread is on average 2.5 cents, depending on what it is. The average fee that exchanges charge is somewhere in the high 20s or 30 cents per 100. In other words, the fee is a fraction of the bid-offer spread. In crypto, if you take Coinbase for example, their fee for taking liquidity is 30 basis points. The bid-offer spread in Bitcoin at a moment in time typically is on their individual exchange is 1 penny. So it is well north of 1,000 times larger the fee than the bid-offer spread. That is a massive difference in the way you would want to approach crypto trading, and it has many implications for the way you design your system. Second large structural difference is the difference in concentration of liquidity. In equities, the first 10 price levels, more or less, and it depends on the stock, of course, is somewhere around 90% of all the available liquidity on all the exchange books. Very skinny tails. That's why you have things such as limit up, limit down, erroneous trade policies, etc., in order to stop flash events from happening routinely. Now, they still happen, but they happen much less. In crypto, to get to 90% of the available liquidity, you need to go over 1,000 price levels deep across all the exchanges. So, for example, at CoinRoutes, we are producing 8 terabytes of market data every single day on a consolidated basis across all the exchanges that we cover. That is an enormous amount of data. Now, because, however, it is much more dispersed than equities, what do you have? You have the ability to access that liquidity fairly rationally and fairly rapidly, and you can get it done. Now, one could argue that a lot of that liquidity that one sees in the market is spoofing. It doesn't mean it can't be traded against, however. If you have our smart order router, you can do it. So to give you an illustration, I like to do this parlor trick for people. It works on a Saturday afternoon just as well as it works on a Monday afternoon and during a trading day. If you wanted to sell $10 million worth of Bitcoin on the wire, you could do so somewhere, even including our costs all in, for less than 1.25% almost always. And quite often you can get it done for well less than 1%. At the same time, the OTC brokers who are trading in the space, the large ones, are able to charge between 2 and 3% for the exact same trade. So if you think of CoinRoutes, we are a true disruptor in the sense of we are going to bring the ability to trade to people in a way that is much more like what institutions want to see. So those are the market structure changes. But you asked me a question about consolidated best bid and offer. And it's very important to understand two facts. Fact number one, the markets in crypto are almost always crossed. The bid is almost always higher than the offer when you look across exchanges. But when you take fees into account, the market is rarely crossed. It still is crossed on occasion. Available arbitrage is probably well less than 5% of the time. But the fact of the matter is those two things are different. So because of that, we have two different types of consolidated data products. One at a gross level, where what we do is we provide a filtered consolidated best bid and offer. It can be filtered in two dimensions. First, by exchanges. There are, for any individual trading, any institution trading, they may have 5, 10 exchange connections. We personally, in our family office, have 13. CoinRoutes is connected to 37, so there's many that people could be trading. But people want to know the consolidated bid among the exchanges that they can access and the ones that they do access. So you have the ability to filter by exchange. A second thing we allow is for filtering by size. Now, we take this for granted in the equity world. 100 shares is a round lot. Quotes for less than that don't show up in the consolidated quote feed, but you can buy private feeds that show it. What we've done in crypto is we have the ability to look unfiltered, but you could also filter it at, say, 1 Bitcoin. Only show me bids or offers that are at least 1. We also do it at 5, 10, and 20, just so you can see where real size bids or offers are. It creates very different views of the book when you do that. So that's one product we have. That's on a gross basis. The second product we have is something I alluded to in the preamble called real price. And that's an invention that frankly could work in a lot of markets. It's something we filed for a patent for in January. The idea is simple. Show me the consolidated price at which I can buy a discrete quantity of an asset. So in the case of Bitcoin, for example, we calculate real price at 5 Bitcoin, 10 Bitcoin, and 20 in real time right now and have a real live feed for our customers. We can do it for 100, 200, it doesn't really matter. It uses our smart order router as the core of what it does, and so within some number of discrete milliseconds, it will keep that up to date. That includes fees, and the fees that we currently use are to level set for a consolidated kind of gross feed is the fees that exchanges charge if you trade 100 Bitcoin or less per month, because all of the exchanges have tiered fee settings, and so you have to pick some number in order to come up with a normalized feed. Now, if you think about what that does, that gives you the ability to know with precision where the bid-offer spread is for example, the amount of Bitcoin it takes to go inside of a futures contract. Right? So for your industry, for anybody who wants to make markets in Bitcoin futures, we can give you a feed that shows what does it cost to buy or sell 5 Bitcoin. That midpoint, however, is probably the most accurate price for what is the spot price. You would be amazed at how much that deviates from, quote, industry sources of crypto pricing. So Crypto Compare, which puts a price out that people see, it's very often $20, $30 high. Very rarely low, sometimes accurate, but very infrequently. It's always high. Now, one can be the conspiracy theorist, one can think of reasons why that might be the case. I prefer not to put reasons on it, merely to state the fact that if I were a fund and I wanted to value my assets, I would like to have an unassailable quote to value my fund based off of, and that's something that we provided. So that's the answer to what we do for consolidated data.
I'm glad you explained that, because that's an interesting area. And it sounds like, the perception a lot of people have out there that, crypto is not deep or is not liquid is not necessarily correct. They just have to go through certain steps to get to access that depth, to access that liquidity. And maybe sounds like CoinRoutes and some of your proprietary algorithms and methodologies are maybe one way they should consider. Now you mentioned other players you are kind of in a bit of a crowded space right now. We have a lot of people come through to us and tell us that they're going to somehow aggregate, the crypto space, for lack of a better term, maybe provide access to multiple venues through one portal, or trying to create a consolidated order flow or feeds like this. So it is a very, shall we say, crowded space right now. It sounds like you think you guys have the secret sauce to make your stuff. And no one has approached me yet, to my knowledge, saying, hey, we've created the de facto NBBO for crypto. So it sounds like, at least for major players, you might have a leg up in that space. Is that your takeaway as well?
There's a lot of hot air in crypto.
Yes,
that's for damn sure. There are many, many people who claim they're going to build. I actually almost never, in a presentation, whether it's to investors or to clients, use the words, I'm going to build. We never do a demo off of a PowerPoint. We show live software. The difference is, we have two differences versus all the blowhards out there that are saying they're going to build, they're going to do this. In that, so far as, one, we have live software. We actually do this. The second is we have protected IP. We have actually gone to the trouble of coming up with proprietary methodologies that we have patented or filed for patents on for methods of consolidating that data. And that's very, very different. Look, I have 30 some odd years of experience in market structure, and I can tell you that if you haven't done a deep dive to understand the market structure differences in crypto, you are likely going to fail. There's another big piece of this which people don't realize. Most of the competitors in this space, in fact, every competitor other than us, makes people use multi-tenant systems if you want to trade. Well, what does that mean? That means you create a huge aggregated honeypot of wallets and key information for hackers to steal. In our case, every client gets their own version of the smart order router. They keep control of their own wallets and keys. I'm not going to make the decision for people, but I will tell you that the ones who are in the know are very appreciative of our methodology, and we are unique in that. That is something that's actually the first patent that we filed for, but we're the only ones doing that, so it's kind of a big deal. I laugh, everyone says, well, what are you going to do about, for example, the new venture, the new exchange, Eris Exchange? Cool. Eris Exchange has a derivatives platform, and they're basing it off of an index of crypto that I wouldn't let any family member ever use, because it includes exchanges that produce prices that are not just unreliable, but almost certainly include wash sales.
The Bitcoin reference rate that CME uses.
Well, CME's Bitcoin reference rate is not horrible, but it is slow to the market because it uses averages and it uses methodologies that are basically designed to be semi-opaque so that they could charge money for an index product. What we've done is created an instantaneous price feed that is always accurate, and that is different. So, whether or not you do an index, you could talk about indexes. I've been in the index game for a very long time. I told you I built the very first program trade, the very first index arbitrage system on Wall Street. The fact is, indexes are designed to be multiple products, not single products with lots of prices. People have bastardized the index game to try to make money and take advantage of the situation. The reality is, if you want to create an index of 10 different cryptos, that's cool. You should do that, and you could have your weighting scheme, etc. But the pricing you should use in real time is something akin to our methodology. Whether you use us or somebody else, it shouldn't be weighted here and something that's opaque that people can't see, understand, touch, and feel, and recreate on their own. That's a very big difference. So that's something else that goes on in the space.
Are you saying in this era of charging ever more for market data, people might be playing with numbers and creating proprietary things to charge more for? I refuse to believe it, sir. I've never heard such madness here.
Yes, it's crazy. It's crazy.
But and let's talk about some of the other elements of crypto that are a little bit different than securities. Obviously, most in the security space, you can sign up with your broker of choice and execute through them, and they execute on your behalf, to the different venues. Crypto, a little bit different. You mentioned Coinbase. There's a legion of others out there. So if I come in and I sign up with CoinRoutes, I still need to maintain separate accounts with all those different venues, correct, to execute through them? So do you guys have any sort of way to facilitate that process, or is that something?
Well, we help clients because we have contacts with most of the exchanges. We view ourselves as a bridge for the exchanges. The natural competitors to the exchanges, the Coinbases, the Krakens, the Bitstamps, the Geminis of the world, the ItBits, is the OTC market. A lot of Bitcoin trading happens over the counter. It happens opaquely. It happens at wildly out-of-line prices on occasion. It happens with very high margins. We are providing a way for those exchanges to actually compete with that in a very unique method. So we do have pretty good relations with a lot of the exchanges, not all, but so we can help. There are also multiple groups of people. There's at least a couple of banks out there, and then there are other groups that are looking to build pan-exchange services to make it easier for people. You will still need your own exchange accounts if you want to trade. So there's agents are popping up that look and feel a lot like broker-dealers, but because they're not securities, they're not registered as broker-dealers. In other cases, there are broker-dealers that are setting up subsidiaries to do this. That will make it easier, and they will handle all that for their clients. So there's multiple ways of going about it.
Yeah, it is interesting because we've talked to a few of those different people who are trying to provide that single kind of point of interface for the crypto market. And you're right, you still have to go and do the legwork as a client to set up the other legs to the different connections. So it's not like you can still do that one-stop shop for crypto, which I guess
there are places that will help you do that. So people are forming companies, and there are some established ones. The OTC companies, the Cumberlands of the world, certainly give you the ability to do it. It's just a question of margin. So as more and more competitors move into that space, it'll be like the broker-dealer community. Right now in equities, no buy side is a member of the New York Stock Exchange or NASDAQ or whatever. They use sponsored access or they use the algorithms from the brokers. Well, you'll see that develop more and more in crypto. The only difference is most crypto investors are tech savvy. So for them to actually have an exchange account is not a really big problem. And so they understand that process, and those are the people who we're targeting, them and the broker dealers or the agents themselves. That's our target client. So all those people, I expect a list so I can call up and see if we can sell our software to them.
I'll see what I can do for you. But, you know, it's interesting. I'm just curious, anecdotally, talking to a lot of those different people, like people like yourself who are routing business to a Coinbase or a Kraken. I've heard from talking to a lot of people who are doing that those venues, they're so awash in business that they don't even pay you a referral fee for sending them a new funded account, which to me is, and coming from this business, is absolute madness. I can't imagine that. Is that the scenario you guys are encountering as well? You're helping to open accounts at all these different myriad venues, and they're just saying thank you. But that's
basically. But in our case, it's actually it's fine. I'm actually okay with that. Frankly, we do pay referral fees for people who help open business with CoinRoutes, but we're a little bit different. We're a software company, and we're trying to extend a big net. Our real end game here is creating network effects within our network. While exchanges are where the trades are going to happen, and we do not operate, nor do we ever have a plan to operate a dark pool or exchanges, we want to know the most efficient place to send trades. So as exchanges develop, we want to work with venues which are good at custody. For example, Gemini or Coinbase have invested enormous sums of money, and Gemini just had a press release yesterday where they're insuring your deposits on Gemini as well. So that is a very big deal. So to the extent that we have clients that have a safe place to trade and we can direct trades to that venue on both sides of the equation, then we can help make our clients' trading better, and we help them. We're fine with that. The other piece of the puzzle is market data. Right now, the exchanges don't charge for data. Eventually, they're going to charge for data. So our model is very simple. To the extent the exchanges charge, we'll pass that on to our clients or not. That'll be up to them. We're just a pass-through. The fact is, people like us who actually audit how people are using data are very helpful to the exchanges. So it will allow them to expand their business models as they move away from totally free data to a more freemium model where they have better and better and more. We will obviously participate in all levels of that. So I have no problem with the cooperation with exchanges. The reality is it's a business that's overserved in the future. There are too many people jumping into exchanges, whether it's Eris Exchange or the San Juan Mercantile Exchange or a newer exchange that's gaining traction is called LMAX, the London Metal Exchange, that are all to compete with the ones that I had previously mentioned. And then there are some of the incumbents and some of the less savory exchanges all around the world that people kind of turn their nose up at in the securities business, but have done some really good things and maybe some not so good things alongside it. So it's a very dynamic space. So for us, we just want to stay on good terms with everybody.
Yeah, I've lost count of how many times at events like this people have approached me with a business card that says we're in the derivative space. So usually it's we're the new crypto derivatives exchange, and here's this, and we're building this new derivative. So you're right, that is a very hot button area for a lot of funding, a lot of startups these days. Is we're going to be the new. You're right, Eris just launched their new venture as well. So there's a lot of players in that space. Speaking of events, I'm curious. You mentioned you had a decent people here at this event, but we're at a securities event. I was actually talking to some of the STA organizers. They said they were going back and forth on whether to even include crypto in any sort of sessions because there was a lot of pushback from some of the members who maybe view what you guys do as somewhat competitive to what they do in this very vertical equities silo here. So I'm curious, what has the reception been like to CoinRoutes at an event like this? Are people excited? They want to engage with you? Are they like, whoa, evil eye, stay away from me, you're a competitor? What's What's the reception been like?
Well, I mean, I'm a little bit different than most people because I've known most of the senior people in the space for such a long time. I mean, virtually every single presenter on every single panel, I'd say I know 90% of them personally on a first name basis, usually in many cases for a decade or more. So in my case, I don't have any pushback. The reality is I've sat through all the sessions so far, and all but one, the only one who didn't mention crypto was Ben Sass. So everybody is mentioning it, and there's a reason for that. Now, there's different levels of skepticism, and admittedly, because of my unique way of coming into this, and I've looked at it fairly deeply, I believe that tokenization of assets and digital assets are going to be the future of finance. Now, does that mean I believe that Bitcoin or any of the coins that exist today are going to be the ones that are ultimately worth trillions? No. I am not smart enough to know what are the protocols that will ultimately win. But understand one thing about crypto. What makes it hard to regulate is also why it will ultimately be a success. Crypto assets are polymorphic. Big word, means something very simple. A crypto asset at the same time can function as an investment, i.e. what we would call a security, can function as a commodity, it has specific use cases within its own network, and can function as a currency or a medium of exchange for people to buy or sell. We have never had an asset like that before. None of the regulations grew up with even a hint of that in their mind's eye, and people don't understand the efficiencies that can create. It drives people nuts at the IRS because you could buy something and then exchange it for a good or service. And so what's the appreciation when you exchange it for a good or service? Well, how do you value the price of that good or service? As long as it's still priced in dollars, it's okay. But eventually, is that the case? And so that's an important thing. And when you get outside the United States, where they don't have a dollar that is the reserve currency of the world, all of a sudden it takes on yet another meaning, a safe way to transact without a puppet government able to control it. That is a very, very unique sort of property which crypto has. And when you couple that with the ability to fund companies by it and do startups by it and tokenize those assets or real estate or other sort of assets, there's a lot to it. So I look at CoinRoutes as me betting, putting my money where my mouth is, but betting on the future of the space, not on particular coins.
And you touched on the derivatives side of the space earlier. Obviously, that's of near and dear interest to us and a lot of our listeners. What are your thoughts on right now we have essentially two listed futures, the CME 5-coin one, the CBO 1-coin one. There's a lot of various OTC permutations. What are your thoughts on the crypto derivative space and maybe where you can see some improvements, maybe some new products coming down the pike, or maybe you guys have something planned for that as well?
No, what we do is we have a very laser focused process to make pricing and routing and trading of the spot crypto better. Will we eventually go to derivatives? Perhaps, but what's important is you can't have derivatives without trust in the spot market. If the spot market is manipulated, if you don't know the price, if you don't know where the liquidity is, you can't trade derivatives well. So to the extent that we make those gaps go away in the spot market, it will naturally tend to increase the use of your derivatives. BitMEX is a derivative exchange that's not regulated and it has a lot of volume because people, let's face it, people like to gamble, people like leverage. I mean, my grandfather was a bookie. I understand gambling, I understand poker is another one of my hobbies, so I understand that basic human desire to make bets. Right now, there's no commercial hedge case for crypto except for miners. Miners have a natural reason for futures, and so that product will ultimately become relevant for people who are creating Bitcoin as part of the transaction networks. But it has not matured yet. So I look at derivatives as a natural outgrowth of creating the better foundation for the spot market, and ultimately will certainly be successful. But I think current derivative efforts are putting the cart before the horse a bit. Not the futures, which I think are clear, but I think that there are things that are going on that make sense there. But the overall derivatives as we know and love them in the equity space, I think that we're a ways away from getting there.
You mentioned before that there are some shady players in the crypto space, as there are in any marketplace. One of the concerns a lot of the institutional players have about dipping their feet in the crypto waters is there's been a lot of headline-making stories about manipulation. The run up to 20,000 in crypto, was it manipulated? All these kind of things. So there's a lot of consternation on that front. I'm curious your thoughts on that, and B, maybe do you see what you're doing, CoinRoutes, bringing a little bit more transparency and NBBO maybe as an alternative to that? If you're accessing all these different venues, it might be a little bit harder to manipulate on that front.
Well, I think that manipulation is certainly issue in every single capital market. I think that the trend towards Gemini taking on NASDAQ smarts and people like Aventus Systems building crypto manipulation tools for exchanges and other people to use will help in that regard. I think CoinRoutes will help in that regard. For example, people are concerned that there's spoofing in the crypto markets. Well, what spoofing is placing bids or offers that you have no intent to execute in order to push the price higher. Except that with CoinRoutes, you have the ability to trade and actually fill those orders even though they may be away from the market. So if someone is actually looking to sell $10 million worth of Bitcoin, those bids that people are placing 0.25% or 0.5% below the market that they think are just to goose the market higher, they're going to be the owners of that coin. Well, you can't do that if you don't have the intention of buying it very long without being put out of business. So the reality is the more you have transparency, the more you have products like ours, the less profitable it is to do a large amount of the types of manipulations. And that's part of the maturation of the market. More than anything else, if a profit strategy, if manipulation isn't profitable, people won't do it. So there is a lot of that. Now that said, the one area that needs to be stamped out is wash trading and fake volumes. For example, when we do our investor deck and we're in the middle of a capital raise that we're doing, and we basically had to come up with revenue models off of volumes, the very first thing as I did is I took the volumes that are reported by supposed industry sources and I discounted it by 65%. And if you ask me how I got to 65%, it's because A, it's double counted, and B, there is a significant percentage of what looks to be wash trading volumes. And so we just immediately assume that the volume is much less than people say it is.
Yeah, we hear that quite a bit as well. I'm curious, there's something else in the crypto space that kind of fascinates me. You actually yourself are an example of it. We're seeing, crypto kind of emerged from the tech scene, this kind of anarchist, stick it to the man kind of movement against fiat and everything. And now in Chicago, but in other areas as well, we're seeing it come into contact with the professional trader, financial services type of mindset. It's kind of two worlds coming together. Sometimes they clash, sometimes they mesh very well. I'm curious, like I said, you're a bit of an embodiment of that yourself. What are your thoughts on these, you and your son, for example, good examples there. What are your thoughts on these kind of two worlds coming together and maybe what we're seeing as a result going forward and in the crypto space?
That's an awesome question, because before I got involved in this, I used to consider myself a libertarian, not an anarchist. I believe that governments exist to handle the things that are necessary. So in economics, we use the term externality. So governments are there to enforce contracts. Governments are there to protect people, I believe, in a safety net, et cetera. But I think government is much too intrusive in many cases. And in crypto, I'm specifically calling for principle-based regulation and industry self-regulation. Until I started meeting people in the crypto space, I used to think that I was out on somewhat of a fringe in terms of being libertarian. I now realize that
you're modest.
I am very, very centrist relative to some of these people who believe governments have no valid reason for existing. Look, at the end of the day, Chris Concannon was just downstairs and he was talking, and I've known Chris for a number of years. He actually made a joke that all the people in crypto have man buns, and while I do have a nice head of hair at my advanced age, I do not wear a bun, because if I did, my wife would probably kick me, and my daughters would certainly make fun of me mercilessly. The fact of the matter is that there is a mixture. Jonathan Kellner, who was the CEO of Instinet, going over to Coinbase, is the latest person who I know of. Greg Tussar, another colleague of mine who I have huge respect for, has moved into the crypto space. There are quite a few of us that understand financial markets, but also are willing to be early adopters of technology. Given my background, as you can understand, I am an early adopter of technology. I've always been on the cutting edge. I want to stay on the cutting edge, and probably will be on the cutting edge until, well, I'm not in the industry anymore. The reality is, people are starting to understand that there's reality here. Now, it's still long term. I think that crypto, more or less, is where the internet was in 1993. I mean, maybe before Netscape came out. I think that the difference is today people are trying to invest earlier and earlier and earlier in order to try to get an advantage, and so they go over the top. The reality is there's a lot of money out there that has been shut off from early stage investing. The average person has not been able to invest in an early stage startup basically for over 15 years, because VCs and PE firms have dominated that. So you have a huge amount of unslaked demand for risk capital. And so they've moved into crypto, and what did you see? You saw people bump the price up just way before it was ready. You see ICOs that can be best described as fraudulent in 90% of the cases. A lot of the people who bloviate about they're going to build, they're going to build, they're going to do, are the ones who raised enormous amounts of money via ICOs. I could name them. I frankly would be willing to in some cases, but the reality is there are many of these quote competitors in this space that haven't done anything other than spend all their money at consensus parties and Lamborghinis and things of that nature because they think they can.
I just had the consensus guys on the network recently. They are, I think to call them true believers would be an understatement. They're big believers, and Ethereum is going to change all aspects of life going forward.
Well, there are a lot of very smart people at Consensus, and I have huge respect for what they're doing. Their parties and their conference, however, is frankly going to be looked back on as an embarrassment. The fact that you have 8,000 people to talk about crypto, that's not embarrassing. But the fact that you have parties and people and cultures, my daughter, who's a 20-year-old student at Berkeley, who is in the business frat there and is working for a VC firm, she went to some of these consensus events to help out CoinRoutes in terms of marketing. She produced a conference at Berkeley that was a very serious conference on blockchain. To look at the world of crypto through her eyes is to see what the world of bond trading was in the 1980s, chronicled by Bonfire of the Vanities. So clearly there are some excesses that need to come out of the system. But look, the reality is there's massive potential here. And people like Mike Novogratz at Galaxy sum it up very well. Crypto right now has 10 times the amount of concerted brain power in it and engineering talent in it that Apple does, and it's 1/5 of the market cap of Apple as an industry. So when you look at those sorts of things, you don't believe that's going to last. Either all these people are wasting their time, or there is going to be things that come out of this that are amazing. And I could point to several of them. If we had another podcast, I could go through it. But the reality is there is a lot there. It's just early. And so there's not a lot of killer apps in crypto yet. Frankly, we have one that I think is an absolutely killer app. We're not going to debut it probably till 2020. Something we call RouteCoin, the idea of using a smart contract that in itself has value to collateralize protecting of data to be able to aggregate dark liquidity. We put a white paper out on our website in February to stake our claim to the ground. But the reality of the situation is you need to have the network effect first. People who create these, quote, utility tokens when there's no utility yet, I think is a problem. Having a utility token when there is utility, well, no, that's cool, but we really haven't seen a lot of that yet. What we've seen is no utility tokens for the most part. Ethereum has some use cases, and I think it has some real potential, as do some of the other major cryptos that are out there.
Well, Dave, this has been fascinating. We covered a lot of ground here, but before we wrap up here, if there's anything maybe we thought we missed, or perhaps you want to leave our audience, you kind of just did, but if you have another one in your back pocket, maybe a little bit of a hint, a little bit of a teaser of what's coming down the pike from you guys at CoinRoutes, now is the time. The floor is yours.
Well, I think the most important thing from our perspective is trying to understand that the market does need to mature, and so algorithmic trading, things that take advantage of the actual market structure, is really important. But the simplest sentence I can do and say is, if you're trading using the exchange interfaces from individual exchanges, you are a fool. Now, you're not a fool because they're bad places to trade. You're a fool because you're ignoring the rest of the market. So no one would trade only using the quotes from one stock exchange. Yet in stock exchanges, you have this rule that forces that exchange to always honor everybody else's price. In crypto, that does not happen. So when you trade on one single exchange, you are always risking money. It is a foolish thing to do. So we provide you an interface where if you want to be trading on the exchanges with your own accounts, we provide you a far, far better way of doing it. Now, of course, there will be others that do that. The point is the market needs to change. The idea of exchanges offering their own interfaces, they don't even do that in other asset classes for a reason. That is probably the single most important thing to understand, is that you should run, not walk, towards whether it's us or competitors, multi-exchange interfaces. It's the only way to trade to understand it. And to give you an idea of why this matters, there was an example in August of one exchange where people were buying a lot of Bitcoin. They took the price on that one exchange up to $75.50 over a 10-minute period when the rest of the market was trading at $67.20. This is not a unique occurrence. You're laughing, but this is real money being flushed down the toilet by real investors. And we can help eliminate that, and that's why we're in the business. It's one of the big reasons.
Well, Dave, if people are interested in this, they want to learn more about CoinRoutes, where should they go? What should they do?
CoinRoutes.com is our website. My email is there. We have a support thing. I'm on LinkedIn. People can hit me up. I'm not a shrinking violet. I publish content every month for sure. Most often every week I post something.
Yes, you have a blog there. I noticed. I checked it out. So yeah, if you want to read up on the latest happenings in crypto, CoinRoutes.com is a good place to go. Well, Dave, this has been fascinating. Thanks for coming on. I'll look forward to seeing how all this plays out in the marketplace in the coming months.
Well, thank you for having me.
Great. Thank you.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.